says going live. I guess, are we live yet? Still just spinning for me. Ni hao ma. Cool, now it says I'm live. So good morning. Welcome to Forex.Today. My name is Wayne McDonald, and I'm the #1 real money options trader, and this is my private Wait, no, that's the ad that keeps running. What does it mean to be a real money options? Anyways, whatever. I don't know if you get those ads, but I get those ads all day long. So ni hao ma. Happy Forex Trading Day. Tuesday is a new Monday. So today, not only will we go through dollar pairs and yen pairs and Swissy pairs, we'll do gold and oil and Bitcoin, but we should also go over the calendar for the week, looking for risk events. And of course, answer your questions. So let's go. I slurp my macchiato. Yeah, Mr. Heigelbach got it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, so good to have you here. Welcome to Forex.Today. This is a group of 14,000-ish foreign exchange traders that get together every single day to realign their satellites, talk technical and fundamental analysis and trader psychology. Make sure they're on the path to, financial salvation, whatever. So good to be here. My name is Wayne McDonald. I've been trading for a long time. I'm probably a few years ahead of you, maybe even a decade or so ahead of you. That's cool, man. So I'll just share everything I learned. And why is that? Well, the sponsor of this community is Trader's Way, and they're like, you know what? The best customers or best clients to have are the ones that are educated and skilled, because when they open an account, they trade, they're profitable, they grow their account size, they grow their lot size, and they become clients not just for a couple of weeks and blow up a trading account, but they become a client and trade for years and years and years and years and years. So Trader's Way is like, you know what? Help them out, educate the clients first, and maybe they'll swing on by. Okay? So I'm asking you, give Trader's Way the opportunity to earn your loyalty and respect, if these webinars haven't done so already. Visit tradersway.com, open up a demo account, download NT4 from your back office, place some trades, fast execution speed, narrow spreads, wide swaps. That's everything that you want. So give them a chance, huh? Tradersway.com. And today is going to be the day I'm going to throw it back to you. By now, you should have somehow. So, anyways, cool. My aggressive Trader's Way account is crushing it. Yeah, things go good, they go real good. Okay, that's the easy part, right? Make sure you got downside protection built into your trading. So let's do the calendar, as they say in France. Oh yeah, would you do me a favor? Would you please like and comment and subscribe? Cash recommends that you wait and see if it's good. That's cool. That's cool. That's right. That's fine. That's cool. All right, so let's take a looky. Okay. Let's take a looky. German GDP, negative 2.3. Is that good? Wonderful macchiato. Okay, so RBNZ tonight in the Asian session, that's really cool. There's an opportunity to learn something from a central bank. You know, when a central bank wants to tell you something, you should probably listen, because they are the ones that actually set the valuation for the currency by either altering interest rates or altering the money supply. Either way, the valuation is likely to change because of those things. So when they want to whisper, you open your ears wide. So here's an opportunity to learn about New Zealand from the RBNZ. Okay, so check that out. That's an opportunity to click on a link and do some reading. Okay, Pelosi is speaking tonight. Cool. Wilkins too. So Canada's trying to get your attention. Right on. Like one speech isn't enough, so that's cool. Wednesday, nothing. Okay, but you know, oil inventories come out Wednesday, so maybe that's going to be interesting. So I don't know if you're tracking oil and those currencies, whatever. Wednesday is usually a big moving day. Thursday. Well, right off the bat, you know, we're still very interested in weekly jobless claims, which always comes out, right? Backward-looking GDP, no one cares. Durable goods orders, you know what, that might be interesting just to see. I don't know. I guess we're all interested in whether money's being spent again, but that's such a volatile play. I never make a big thing out of durable goods, but you know, it's a data point, right? So pay attention. But the big one's obviously going to be weekly jobless claims, and yeah, you might want. Yeah. See, I don't think GDP is going to be that big of a deal, but look at negative 4.8. Yowzers. Okay. But like, there are other interesting things going on besides these big sort of data sets. Like, how about the smaller data sets? In the Northern European countries that have already reopened their economies, they're spending more on their credit cards than anticipated. So that might be interesting to see how fast the economy responds to reopening. A lot of people said it would be slow. So right now, Florida and Alabama are complaining, or let's say not complaining, but very, very concerned because they opened up for this holiday weekend and the beaches were packed, elbow to elbow. People weren't like social distancing. They're like, boom, game on. We're back in, party, beach, let's go, right? And likely spending money along the way. So you can, as an economist, say, well, how fast will the recovery be when they open? Well, there's some interesting sort of micro data, if you will, or high frequency data that may help you model that. Yeah, so Mr. Highville says, well, then maybe second wave coming. Yeah, but you know what? Now that we've done it once, maybe we don't care as much. So I don't know, but put that in your model. Okay, people are spending, people are traveling. I don't know. So anyways, pay attention to the information that's out there. It's all ones and zeros floating above you. Okay. And then Friday, Canadian GDP, okay. Looking for some positive numbers. That's interesting, right? Consumption, yeah, we like PCE. Why do we like PCE? Friday's PCE. Why do we like PCE? I think I need new milk. Why do we like PCE? It's not consumer confidence. Tell if people are spending. Yeah, but we got more than one indicator for that. Danny boy. We got more than one indicator, so why do we care about PCE? Yeah, Peccary says a typical American way of thinking. Well, there's different cultures and therefore different models. So like even the form of capitalism is different in Europe and the United States. So there's going to be different points of view. So like, for example, Europe, I guess it wasn't on the calendar here, but, you know, Europe's going to announce their big, you know, bailout, right? Maybe that's what this is. Their big bailout. So no, you know what they're going to do? Like forgive a couple of loan payments. Guarantee some loans. What does that do? Thank you. Yeah, Mr. Connor answered it. The Fed uses it as its gauge of inflation. Not confidence, not spending, inflation. PCE is the Fed's gauge for inflation. So the Fed will look at it. Okay? No, I know you didn't mean it in a harsh way, nor do I, but so like, let's compare the two central banks, and you can use it as sort of a gauge of how their economies are set up. Like, they're completely different points of view of how you should run an economy. And neither of them right, and both are flaws and both have upsides. It's just the chosen means of governing a society and an economy. Okay? So when things got bad in the United States, the US government gave everyone like thousands of bucks. And the European Union apparently like forgive some loan payments. Okay? So what's the difference between getting a couple of $1,000 and saving a couple of $1,000? What's the difference? If you saved a couple of $1,000 on a loan payment because it was forgiven, because you lost your job or something, you still didn't have to pay a couple of $1,000. So that's cool, right? You're like, oh, thank God, I don't have to pay that mortgage or that loan or whatever it was, right? Versus just getting a couple of $1,000 in the pocket. There's a couple of $1,000. One goes to GDP immediately, right? Cash, increase of M1, increase of spending goes, and when you spend, it's becomes someone else's income. It not only it pushes up GDP, but it pushes up GNI. And the European model does nothing. It will not impact GDP. It doesn't lead to spending. You just don't have to make a payment. Okay? So, who's going to respond faster? Which economy is going to respond faster? The one with skyrocketing GDP? See, I've already predicted we're going to be at like plus 4% GDP by next year. Okay? Yeah, what you do with the money is irrelevant. The thing is what you do, that you do something with the money versus not having to do anything, right? So anyways, there you go. There's a big difference, right? So, you know, like the European response to the 2008 crisis was jack up taxes and cut spending. This is kind of the same thing. They're like, okay, you're starving to death, you're super hungry, you can't afford to buy dinner. Well, you won't have to pay your credit card bill for 2 months. You're like, okay, I really appreciate that, but I'm hungry. Okay? But you get to skip a couple of credit card payments. You're like, okay. So whatever. It's not good, it's not bad. There's different consequences. Okay? And here's another consequence. So the downside of the American way is we go from 3% unemployment to 20% unemployment overnight, right? What happened to Europe? Spain is still 20% unemployed. They were 20% unemployed when the markets were awesome. Then the markets tanked, so there's still 20% unemployment. What does it mean? Well, their social structure and their means of managing their economy, both sort of through fiscal, monetary, but also through the legal measures, Spain will always have 20% unemployment, no matter what, because you can't get fired in Spain, but you also can't go bankrupt. Okay? So you have this very stable, high unemployment rate, where in America, you go from like 3% unemployment to 13, and then back to 3. And you get these boom and bust cycles, which Europeans don't get because their model is a lot more socialist leaning. So yeah, it's never fully employed, but you don't have big spikes in unemployment either. But they build that into the model through, you know, like I said, the fiscal, monetary, and even legal systems You'll get more stability, but there are consequences to that, right? So, anyways, very, very interesting, as they say. Hang on, I need another cappuccino. Un momento, por favor. Cappuccino! Uno cappuccino, por favor! Okay, so interesting, right? So of course, if you're an economist, you'd be able to model the differences and compare and contrast in like an 8-page paper and whatever. I won't make you do that. So, so interesting week, right? Interesting week. There's enough grease to help move the skids, but nothing in our way. But I would start with the RBNZ, and you might want to take a look at what's going down with that. How do you do it? You go to the RBNZ website. There's this thing called the internet. Remember when people called it the internet? I'm like, whoa. That's a network. Internet is outside of your internet. Oh, dang it. Half the cappuccino is on the counter. See, I can't multitask. All right. All right. So people went to the beaches. People did their barbecues. People left the house. And people outside of New York City are shocked by it. But it looks like people are spending. People are traveling. People are getting over it. It doesn't mean if they're right or wrong. Don't get all pissy about that. Oh, they're crazy. Don't even just whatever. You're an economist, okay? So you just kind of look at the facts. People are going out. It doesn't matter if it's dangerous or not. It doesn't matter if you agree with it or not. You as an individual, when it comes to economic data, is irrelevant. You're just one data point in millions of data points. So what we're looking at are people going out, people are spending money, people are traveling. So that means risk on, Bubba. Risk on. Years ago, he was the ship's captain. Yeah, anyways. So that's how we look at it. Risk on. This was a big test. This was a big economic test. People had the ability to make choices. Are they going to go back to a normal life or not? They went back to a normal life here in America. That's risk on. And you're going to see everything up. Okay, great. So that's just technical analysis. But we also know, okay, where the congestion is going to be. Okay? So if you remember being in these trends, this is one standard deviation from a mean, and this is two standard deviations from the mean. And we were talking about two different ways of measuring this situation, and both were correct because it's just statistics. One is if you were sort of market neutral in your opinion, your alpha, for measuring the conditions, you were looking at the sideways and you were thinking sort of off the top to the bottom, to the top, to the top. And this is how you were analyzing market conditions. And so even if you're a bull, you probably weren't a buyer unless you were way down here, like this and like this and like that. It's like this, y'all, and like that, y'all. Oh, there's a song in there somewhere. So anyways, so you're waiting for that. Now, one of the things I was saying at that time is I want to be a bull. I believe in here we had a central bank give us new information. So there was a fundamental change during this period that didn't exist in this other period. So therefore, I want to be a bull. I want this to go up. I want this to go up more than before. And therefore, I have this, yes, neutral, but neutral to up. Neutral to bullish, not neutral to bearish. It's like this, yo. It's like this, like that, and like this. Yeah, there's somewhere. I think I got 2 songs stuck in my head. Okay? But do you understand, guys? Like I said, this mattered. And what was that? Do you guys remember? Fed meeting minutes. I prepped you for a week in advance to be ready for that. Not the meeting, but the minutes. And we were ready a week before it came out. Then I told you on Saturday in the news, my little news thing. Then I told you Sunday in our swing trading group, if you're part of that. Then I covered it again on like Monday, and the big thing's going to be a Wednesday. Then I actually downloaded and read it. Again, that might have been with the live group, but I actually downloaded and read it in paragraph 3. There's the intro, there's the setup, and the first real paragraph, they're like, boom. We're not going negative. Slam, whoop, but did it. And this is gone. Okay? We went from the bottom of the range to the up and now through. Okay? So the interesting thing is from this point on, you were either bullish up or bullish sideways. Boom, 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 boom. Okay? So very interesting. I don't think you're going to get through here, but check it out. You went from 60 to 62. I mean, there's some nice up on that. Do I expect a pullback off the top of the range? All right, here's how to answer that question, Big Perm. Is that resistance? Thank you, Willie. I'll look for it. If you think that's resistance, then the answer is yes. If it's resistance, it will produce a pullback. If it didn't produce a pullback, then it isn't resistance. Right? So it's not me predicting the future. It's like, is that resistance? Yes. Then it'll produce a pullback. That's what resistance does. That's why we look for it. So there you go. So that's your answer to your question. By the way, let me throw some light on my beautiful face. Okay. You want to open another account, deposit $1,000 to trade on? Yeah. So I did that for a year. Okay, naked. Do you want the sum of my entire year of trading on a 1 minute chart for an entire year? Everything you need lies on this chart first, and once you got that done, now you go in here. Okay? Done. All right, cool. So I expect euro dollar up. I expect, anything, a dollar weakness. Let's put it that way. Okay, that's what I expect. So that's what I'd be trading. Oh, hang on. I'm bringing in a redundant internet connection in case my gigs goes down. Hang on, I gotta do this. The Google router. Where's the Google router? Oh, this thing. I think that's what she means. I know what she means. Hang on. Hang on, Bubba. Hang on, y'all. All right. So Barry. All right. So there you go. So I want dollar weakness. I want yen weakness, and that's how I roll, yo. Okay. So that's how I put all that together. Let's take a look. That's one standard deviation from a mean. In fact, I wonder, I was thinking about this. Where's my indicator list? Weird. There's no indicator list. So it puts it as an object? Oh yeah, because it wouldn't be an indicator. I drew it, right? So it does a trend line, trend line, trend line. Does it? Interesting. Let me do another one. I should be able, maybe if I click it, hang on. Yeah, let's standard deviation channel properties. Okay, that's interesting. Wonder if this changes just the middle one. No. Yeah, now they're all red. I don't want all red. Blue is fine. Background is fine. Ray, no. Too bad. I would have liked the... Oh! What the... That's interesting. Huh. Huh. Really? Really? I didn't expect that. That might be interesting. All right, hang on. Really? Hey, now that one you can't even see. It's too light. Little darker. Okay, that's pretty good. Yeah, see? Experimentation. Oh, very interesting. All right, cool. I kind of like that. No, uncheck fill. Forget it, JK. I love the fill. So there you go. One standard deviation from the mean. So this is measuring 68% of the data set. Cool. Interesting. All right. Huh. And I think that'll now be the standard default, right? If I go over here, I say, I cannot make a decision. What to do? I can't make a decision. So I'd go, so where's my standard deviation? Right there. Standard deviation. So I'd measure from here to here. Nice! That's cool, man. That's cool. I love it. Keep it. It's a keeper. Yes, yen would be weak. So let's do that. Cool. 1, 2, 3, 4. 1, 2, 3, 4. Huh, missing. Someone got killed. All right. So let's see. See? So we flipped right on my roll reversal. You're welcome. I set this up days in advance. Came down, tickled the 70, and is now up significantly with the new higher high. So there's 2 standard deviations. I should probably move the 1 standard deviation and the 2 standard deviations. Okay, 1 standard deviation. Very cool. Clearly a new higher high. Okay. If you need another indicator, another drawing tool, sometimes you can go to like triangles. And what I like to do is that, right? There's a high, there's a low, and there's a new higher high. And you remind yourself that it's now made a higher high. Okay. So I don't know if these are Gartleys, by the way, so don't get me going on Gartley or not. I don't really know. Okay. But that's one way of drawing it, and it seems to me that's something like, I don't know, something like a Gartley, but I don't know. All I'm trying to say is this high is clearly higher than that high, and this was a higher low, so higher high. Okay. MT4 has been up there for about a week now, Jaime. It hasn't been launched, but it's there. I haven't sent out an email, but it's been there. Yeah, you prefer the zigzag? Yeah, you could do a zigzag as well. That's your Elliott wave stuff. But then I don't know what settings you typically like. Okay. Yeah, for some reason, every time I do an MT5 test, something breaks. I don't know what it is. But anyways. So you see what's going on here, guys? I guess you could draw it this way. I probably didn't draw it properly. You know, you have this. Right, maybe you like it that way. So it ends up being the same thing. Okay. So the continuation of the trend, if you want to look at it that way, or here's the up, 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 down, down. Or I guess you could just use the last highest high. Whatever visually makes it work for you. But a higher high is bullish. This is why the buy zone was down here. Okay? And remember, we talked about this almost a week. Okay, we talked about this since Tuesday, then Wednesday, then Thursday, then Friday, and it came down, closed Friday on the exact price. Gone. Okay? KJ says the installer pack. Yeah, several people have tested it. So they've just gone in, you click a button. I'd even do a little video to show you how to do it. And then there's another video in case you want to install something manually. Okay. So I was hoping to launch officially today. Something didn't quite work on the recent version of MT5. So maybe we'll have a couple of back and forths between the programmer that makes the indicator and the programmer that makes the installer. And maybe we'll get that done today, I'm hoping. So anyways, a higher high is bullish, right? No matter how you want to draw it, that's what it looks like. So that's very cool because that's what I wanted. Okay. Now remember, that doesn't mean correct. It means correct in these market conditions. And at some point, there'll be a correction. Okay. So this one, great. Okay. Just great. Great. Up, 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 up. And again, the way to use these tools, you can go to channel, standard deviation, and you can gather we can go all the way from here, or you can go from the month, wherever you want to grab. So let's go from the first day of the month to the current day. It's going to look at everything as one giant data set. In fact, it looks at it like a scatter plot. It looks at every candle as being one dot in a data set. And then it figures out slope, well, first the average and then the slope and the average, right? And so on and so forth. And then how far a typical data point is from the average, because the average is irrelevant. It's the change in average, the relative change in average, which we call slope, and how far, relatively speaking, most data points are. So it's saying 68% of, right? So anyways, uh-oh. Did my PC die or did my mouse die? Blue. Okay, I can move it manually. My mouse died. Boom, boom, boom. Boom, boom, boom. My mouse died, huh? Do, 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 do. Well, we'll see if we can get through this. Okay. There you go. Yeah, see, this is the issue. Like, Daryl's like, Windows 7 won't open the manual. Like, this is the problem. So this is why I automated things. You don't open the files. Lots of people were trying to open the CTL files or whatever they were, the M4, the MQL files and all that. You don't open them. Most people I think were installing zip files, zip folders into folders, and it didn't work. And wow, it's like, okay, so that's why I created an automatic installer. It just does it for you. Don't worry about it. Okay. All right. So, anyways, la-di-da-di-da. So this shows you that the trend seems to be up, and that when you get to one standard deviation from the mean, and remember, the standard deviation from the mean is always changing relative to the data points. So, you can look at it based on recent market conditions, right? When does price become overbought? Okay. All right, hang on. I gotta respond to something. Hang on, sorry. Cool. I don't use ECN, no. I love soft money. I wouldn't want an ECN. All right. So it seems to be trending, but the other thing is typically when you become this far, it's right, typically based on the data set. Okay, remember, it's just measuring this period. It's looking at all these numbers and it's saying, hey, when you get this far from the average, it tends to revert or regress. It's a regression study. So when you get this far below the mean, it regresses back to the mean. When it gets this far above the mean, right? So these are regressions. And right now, we're in a very, very bullish mode. Very, very cool. But it's saying, well, pretty soon, typically. Okay, pretty soon, typically, based on what's happened in the past, it doesn't predict futures of the future, but it is, let's say, a helpful piece of information. Typically, we get ready to revert back to the mean, a mean reversion, okay? Doesn't mean you have to go to the bottom, but it certainly needs to go back to the average. We're overbought relative to the average over this period of time. So that's just one piece of information. Then we say, oh, look, a monthly R1 and a weekly M4. Oops, that was supposed to be blue. And a weekly M4. What do those indicators, there's two indicators now, monthly pivots and weekly pivots. What do those pivots help us understand? What are they telling us? Well, Daryl, the currency index is probably in the complete toolkit, not the basic toolkit. Yeah, well, they're all telling you kind of the same thing, that this is overbought. and at least bulls will exit. We don't know if bears will sell, but like this is just bulls exiting. Okay. So it's suggesting, it doesn't tell you for sure, but it's suggesting this is overbought based on what's happened in the past. Now, we could go all the way up here. Okay, that's for sure. But then the statistical analysis will adjust and say, well, if you're way up here, then the average high before the reversion will change and these will widen, right? So this isn't magic. It's just statistical analysis, right? But what it's saying is anything above this slope, I mean, let me continue the slope here, for example. That might be interesting. Let's make this light blue. Okay, let's do this slope like this. Okay, what it's saying is anything outside that slope is statistically an outlier. Okay, now that is one standard deviation from the mean. The other thing you can do here is measure 2 standard deviations from the mean. Okay? And now this represents 95%. You haven't changed anything. This first indicator, 1 standard deviation, you're like, hey, indicator, tell me the tops and bottoms of the scatter plot inside 68%, right? With a certain tolerance, let's say. And then you can say, hey, indicator, give me 2 standard deviations, which is 95%. So the only difference is it included these bottoms. But it says that's when the market was 95% oversold. It reverted. Okay, well that also then means if this is going to be unusually bullish, it's going to go about here and then drop to the mean. Okay. Yeah, that's right, guys. If you have an I in front of your, or at the end, I don't even know. Maybe it's at the end. Is it euro dollar I or I euro dollar? If you got this silly I in there because you have a ECN account, yeah, that indicator won't work. Sorry, I didn't program it. Okay. No, this pivot points don't tell you anything about time. Okay? Pivot points measure 1 and 2 standard deviations horizontally. What we're creating here is basically pivot points. Here. Okay? And then you could find the midpoint between these and you know, and stuff like that. And all of a sudden you got yourself a full set of pivot points sloped. Which I might have programmed for you and release it as the next sort of complimentary bonus for all MetaTraders customers. So I'm talking to a programmer now to make diagonal pivot points. Okay? Because the math is the same. It's only different. Okay? Now it incorporates slope. So, but anyways, yeah, this is only price over time, right? But it doesn't tell you the time. Like pivot points don't tell you to do things like, it doesn't tell you it's going to hit on Monday or it's going to hit on Friday. It doesn't know jack. It can't even tell you that we have our RBNZ coming out later today. It doesn't tell you about PCE on Thursday. It doesn't tell you anything like that. It's not smart. Like the dumbest thing you can do as a trader is do something because your indicators told you so. Your indicators are stupid. They just plot the math that you asked it to. It doesn't think. So if you say, well, I'm a bear because of the pivot points, dude, you don't understand. You don't get it. You're lost. Okay, you're lost as a trader. Your indicators don't tell you anything. You need to know what you want and then use the tools to get the results. Right? Like you don't buy a table saw and ask the table saw to design tables for you. It cuts wood. It doesn't design beautiful tables. Okay? So in this case, do the pivots tell you like the timing of, no, it doesn't tell you any timing, but it does measure standard deviation. And then if you use midpoints, you have to calculate the midpoints between the standard deviations, and you get support and resistance of the market. That's all it is, right? Support and resistance of the market. And then when you use price action is support and resistance of price. So this, what we're doing here with 1 and 2 standard deviations is, right, support and resistance of price. And these pivot points over here are basically doing something very similar. There's weekly and monthly, right? But they're doing something very, very similar. They're doing support and resistance of the market. Okay? And suddenly you might say to yourself, oh my God, that totally makes sense. And I say, I know, right? Okay? So cool. But it doesn't tell you that you should be bullish on Aussie yen. Oh my God, you should have already known that a long time ago. And I'd say, well, you read like the balance of trade data, right? And you read the RBA meeting minutes, right? And you're like, no. And I said, well, that's why you don't know. All right, Coolio. Pachow. See, we just drop in. So, are we going to breach? Well, you know what? If we are risk on this week because the U.S. economists and investors feel like consumer spending will increase exponentially as we unlock the bird cages, then the euro will strengthen. So now you're trying to predict the future, and you're gonna tie in some technical analysis from this point. By the way, this hit the 5th of May. This is the projected low for euro yen in the month of May. What's supposed to happen when you hit this early in the month? I just want you to put the layers together here. This is the 5th of the month. What do we know in this situation? Here's the sell zone. What do we know? This thing drops exponentially, precipitously down, and we hit the 5th. You can plead the 5th, you can investigate, get the record straight. Counter trend, thank you. And what's the target on a counter trend? Yeah, back to the central pivot, thank you. So this is the, right? This is what you're sort of assuming from this period. And then you get your up, 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 down, down, buy. So now it's confirmed. Cool. Does that mean we know what's going to happen next? No, we do not. Okay. We hit 2 standard deviations from the mean and it reverts. Okay. And now what? Well, if you think it's a higher high, which you may, let's do it this way. You might think this is a higher high. So you might think this is a channel. Oops. Trying to get that a little more legit. Okay. So now you're looking at it that way if you're a bull. Somewhere in this period here, there's also a bullish Fed. And we know euro dollar is 40% of all of Forex. So, right? So therefore, if dollar weakens, euro's going to strengthen. It has nothing to do with euro. Okay? And therefore, if that is your thought process, now you drop into weeklies. Okay? And this goes back to the person that wanted to trade the 1 minute chart. Like, if you don't understand all of this, your 1 minute chart's going to be worthless to you. Okay? If you can't put together trade plans, your 1 minute's just shot. Okay? But if you're playing all this analysis and then you drop into 1 minute, you're golden. Okay? So now your plan for this week is up. One, you're planning on a breach based on fundamental change at the Fed. Two, risk on based on what actually occurred. Let's say spending patterns of Americans during their holidays. It looks like it was game on there. And then up. Now, all of this could be irrelevant and wrong, and you'll quickly find out you're wrong because it won't make a higher high. And bears will go, ha ha, told you. But they're going to short at 18, obviously. Right? So the bears have already done their job. So now it comes down to bulls. Are they going to buy this dip and drive it up here? Well, if that's your plan, this is like crazy easy. Okay? So if you're a bull now, you got your up, 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 down, down, and you're going to buy it. And you're going to breach the resistance, and you're going to hit your target. Okay? So if you can't put all that together, like your 1 minute and your 5 minute are just completely irrelevant because you don't have a trade plan. And if you don't have a trade plan, you don't have a shot in hell trading your 1 minute chart. If you don't know where we're going today or this week, you don't have a chance. Not a chance. Okay? Okay? So now you might sit around and wait for your opportunity to the up. And now you're in scalper mode. Skippy scalper. And you have to look where your moving average is, all that kind of stuff. Where's the 1 hour 21? It's down here. Okay. Do I have it here? Insert indicators, custom. Zigzag. No, I still don't have it. I need to install it. Well, I should. Should have it here. Symbol X is here. Here, pip counter. Maybe it's called something else. Zero leg. Why is the zero leg up here? So anyways, check it out. This is in the complete toolkit. Let's make this fat and input. Okay, 21. So it's the 21 EMA. Let me zoom in here. With the lag taken out. Okay. Let me look at this slightly different. I might. I want to shift it over. Let's move it over 5. Is that going to do anything? There. Oh, it's even worse. Hey now. I wonder if I can do -5. I wanted to shift it. Moving average shift 0. Hang on. Let's put this back to 0 and do the other one 5. I wonder if I can shift it -5. I think is what I need to do. Let's try that. -5. All right, don't do that. 5. Mouse died again. Nope. Okay, that's better. So when I hit it, okay, that's a little bit. So it's lagging less. Let's try this. I want to go indicator again. Lag 3. Make it a little tighter. Cool. So let's. So here's the 21 EMA. Here's the 21 EMA with less lag. Okay. So I don't know if this is going to be helpful or not. It's something we can test. Okay. Cool. So here's the beast, and you can see it's breaking out of this channel. So what we had drawn here, let me fix this. What we had drawn whenever we did it. Oh, I know. I was doing this for the programmer too, but we did this last week. I had it drawn like this. Let me do this for you this way and this way. and this way. Okay, wouldn't it be cool if this looked like oh, of course I got it backwards. Gold, dang it. Wouldn't it be cool if we had an indicator that looked like this? Wouldn't that be cool? If you had an indicator or something like that? Yeah. Well, we'll see if I can get someone to do it. I'm talking to someone that probably can do it. I don't know the limitations of developing in MQL4, MQL5. Okay. Okay, so we're coming up to standard deviation, so let's increase the data set to include new data. So it's always adjusting because it's one of the things it's calculating is the slope. Okay, so the slope is flattening. Okay, the curve is flattening because technically they're all curves. So that this is pulling it up and flattening. Okay, what do we know about market analysis? Remember, this is price. What does the market tell us? Okay, that's what we're kind of playing around with. And that is weekly pivot points. You see? And what else do we know about this price in here? Okay. Well, back on the 1st of May, May 1st, let me do this in black. Up here at the 1st of May, right here, we projected that this zone down here is where bears will get out. Okay? You understand? This is what we knew the 1st of the month. That this whole area was where you get the heck out. Okay? If you have discipline. Yeah, I got discipline. What's the next trade? PJ, it's a good idea, except I want you to project the future. So anyways, I hope you see that this reversed exactly where it's supposed to reverse. And the reason I drew these slopes is just for a visual representation of the slopes breaking. Okay? You need to be able to say that, yes, these are currently sloped down, but you're not looking at this that way. You're not looking at it saying, this tells me I should be a bear. No, it tells you that using these tools, the tools saying it has been down. Your job as a trader to say is, this is extremely oversold, and what's supposed to be happening is heading back up. And therefore, breaches of these are incredibly important. You understand? Isn't that an inverted head and shoulders? Yes, but like I've always taught you guys, if you can't anticipate the inverted head and shoulders, or the head and shoulders, or the crown pattern, or whatever you want to call it, there's so many versions of the same thing. If you can't anticipate it developing, then it's really irrelevant, because by the time it's happened, it's already over. Okay? At the very least, maybe you said, oops, you said in here, you're a buyer because of that. Okay, sure. But check this out. We knew up here that this is a place in which an inverse head and shoulders would develop. You understand? Like there is no other place on this chart where that would develop. So you have to say, all right, you're a bear. This is an exit point. This is a second chance. It went too low. You know, every bear on the planet needs to be out of this now. You get this ginormous rally, which also fits the counter trend model. Okay. And now we're back into a situation that's likely to end up in an inverse head and shoulders. Okay. And therefore, yeah. Okay. That's why, you know, like to have these project forward is actually very unhelpful, because your job is to be looking at this now. Okay. Or we can use our new friend here. Okay. 1 standard deviation from the mean, 2 standard deviations from the mean. Okay. And now it's much more evident that, see, the last study I did for you to show you the difference, they were really tight because there wasn't much difference between 68% and 95% of all price, because it was tighter. Now you'll see, like, this represents, well, let's do it in pink. This represents 68% of price, and you can see that because there's so much distance from the top. Okay, but now if you include this data, this is 95% of all price. Okay, and to say it differently, anything up here is overbought. Everything down here is oversold. And what happens when the market's overbought? The propensity to want to take profit as a bull increases exponentially. The batarang pattern. How weird. Oh my God. Here's what all these patterns tell you. Okay, you ready? So let's do an uptrend. Higher high, higher low. Higher high, higher low. Higher high, higher low. Higher high. And whether you use inverse head and shoulder, or let's say head and shoulders, crown, 1, 2, 3, ABCD, all these things, like they're all variants of the same thing. So you only need to know one thing. So sometimes the market does a lower low, lower high. Sometimes the market does 100% retracement and then a higher high, then higher low. And then sometimes it does this and down that, and then it creates these slopes and whatever, dude, whatever. I don't care about the sometime part. Here's what all these patterns are doing. Up, higher high, higher low, higher high, higher low, higher high, higher low. And then, right, let's do another higher high. And then you notice some variation of this. That's it. I don't care if it's 100%. I don't care if it's more than 100%. The idea is it did not make a higher low. Done. I don't care about anything else after that, because I'm now selling lower highs and lower lows. And if it ain't me, someone else is. Okay? You understand? Whether it's a head and shoulders, a 1, 2, 3 pattern, they're all the same. Okay, so a head and shoulders looks like this. Let's say you get the higher high, then to the neckline, which is 100% retracement, and now you sell the lower high, lower low. A crown is slightly different. You get a higher high, then a lower low, so you sell the next lower high. If you do an ABC, you get a higher high, higher low, higher high. Well, they're essentially the same thing. And then you go to and so the only thing that matters on this chart, of course, is this. It doesn't belong in an uptrend. So 100% retracement, 78.6% retracement, or the market consolidates first and then breaks out. I call that an old man easing into a hot bath. Great. That's really funny. That's memorable. This is the only thing that matters. Lower low, lower high, done. That's it. They don't live in an uptrend. So don't get caught up in all this nonsense that a lot of these gurus sell you and all these books that have been written about the 19,000 different patterns. It's all foobar. Okay? You get it? Simplify, guys. Don't complicate. Simplify. So what does this chart tell you? Okay? Based on statistical analysis of price and statistical analysis of market, this is going to go up here and stop. That's it. How do I use my EMAs? All right, hang on. Okay. Everybody go here and subscribe. Oops. Stupid Windows. That's funny. Actually did that. I'm not logged in as a Forex Bootcamp. Anyways, we'll get there. You need to go to free Forex training course by FX Bootcamp.
Hello, hello, hello. Welcome
For some
to
reason,
the
it starts you
presentation
on
for the
number 4. How dumb. I'll have to update that somehow.
Hey, good day everyone. Grab a seat, make yourself comfortable. This is a presentation for the Daily FX audience entitled How to Improve the Timing of Your Trades. And to do so, we are going to use moving averages. Now, this presentation is going to be part PowerPoint, but also part live data. See, what I don't want to do is bore you with perfect slide examples.
So
of
almost
charts from the
200,000
perfect
views.
world
So
that makes
do me a
me
favor.
look smart because they fit my theories just perfectly.
Watch
What I'm
all
gonna
4
outline are
videos.
the strategies that I use as a professional
I
trader
can't click on
each
it
and
anymore.
every single day. We will go.
Watch all 4 videos. Leave comments on the videos and make sure you subscribe. Oh, Mr. Connor, I don't turn my back on the market. Okay? But summer, you have to change your strategy on how to trade in the summer. Okay, you can't trade July like you trade October. Right, you just no. So, but yeah, does my trading behavior change and stuff like that? Oh, for sure. Okay. And by the way, I got assigned homework for summer school already. No! Oh my God! They don't even let you in between have some time off. Stupid Harvard. Oh, they're mean people at Harvard. So anyways, I'll be here for you. I'll be here for you. Okay. Cool. La la la. David, you have to draw the object twice. One with one standard deviation, the other with the second standard deviation. Okay. So you know what? I think I'm just going to leave it at that. I think it feels a little short, but I'm just kind of done. So I will see you tomorrow morning. I think starting Monday, we're going to change the time for our YouTube meetings. 1 hour later, it'll be 9, so we can catch the market open a little earlier. We'll need that volatility as we go into summer. Also, if you're in my group that meets at 5, we're starting a whole new chapter of training. For the first month or two, we focused on specifically setting up position trades that would last the entire month. And then the last month or so, we've focused on swing trades that last a week or so. And then the last few weeks, we've been focusing on day trading, things that would last the entire day. So, 300 pip trades, and then we focused on 200 pip trades, and we focused on 100 pip trades. And now we're diving into the 4-hour candle, which would get you into the London session or get you into the New York session and plan literally pulling the trigger inside that 4-hour candle, because we all live inside the wicks. So how to prep and pull the trigger inside those inside those wicks. So really hardcore, detailed internal meaning inside the candle analysis of really how to pull the trigger and let those winners run. So we're taking it to the next level. So get ready for that if you're in that group. Get into the next level. And then hopefully today I can get MetaTraders all done and launch all of that and give you guys 2 free upgrades absolutely for free. You don't have to pay more money or do anything. You get it because you're cool and I like you. So peace on earth. May the pips be with you. May your profits be above average. Thank you, Traders Way. Thank you, Traders Way. Make sure you visit Traders Way and open a demo account. All right. Show your loyalty and respect to Traders Way. Make sure you visit Traders Way and open up a demo account. Okay. Show them that you appreciate this YouTube community that they're helping us build.